given that the preferred stock purchase agreements were agreed to with the understanding that they would remain in place until a clear path to end the conservatorship was agreed upon, and given that there is certainly the potential right now for no concurrence between the House and the Senate or the administration on this issue, at least for the foreseeable future, is it fair to say that cutting the dividend payments would violate the spirit of the PSPAs entered into on behalf of U.S. taxpayers? And could you fairly say that that would unnecessarily absolve the GSEs of additional financial obligations? So let me just get your thoughts on that.
Well, I believe that with respect to the dividend rate, the way I envision this, Congressman, is that the American taxpayer has forwarded the capital that is allowing these companies to operate in the marketplace and is providing the capital that is the protection to the investors in mortgage-backed securities, and that is what is allowing the country's secondary mortgage market to operate.
Right.
If these companies were to be operating today with private capital, that private capital would be substantial, and that private capital would expect a return certainly of 10% or more. So in my view, it's the American taxpayer that is the equity holder here, and so that's why I have no plans to be seeking any adjustment in that 10% dividend rate, because it is compensation of the taxpayer for providing the capital that's allowing our secondary mortgage market to function today.
Thank you, Mr. DeMarco. The other question I wanted to pursue briefly on my proposed legislation to eliminate the Affordable Housing Trust Fund. You mentioned that it would be inappropriate, in your words, for the GSEs to start making payments to the trust fund while in conservatorship. Do you believe that contributions made to this fund could ever be construed as consistent with the goals of the conservatorship, as we agreed initially in that?
My view is that while Fannie and Freddie are in conservatorship and owe money to the taxpayer, that I have an obligation as the director of the agency to conserve assets on behalf of the taxpayer, and so I do not envision a state in which Fannie or Freddie would make contributions to the trust fund while they owed money to the taxpayer and these preferred stock agreements were there. The liquidation preference in those preferred stock agreements require the taxpayer to be paid first. I would add that the statute itself directs the FHFA director to make judgments about not making contributions to the trust fund if that would have a negative effect on the financial condition of the enterprises. I don't have the precise language in front of me,
yeah.
But that's also another basis why, in terms of them making contributions, I don't see that happening.
But that leaves some gray area, maybe not with respect to the judgment you have made, but in my mind at the moment it could leave some question in the future, and that is one of the reasons, just parenthetically, why I want to move that legislation, because I want to keep with the spirit of the agreement